Alright, hope everyone's doing well today. One second. Real quick, so I was checking on Al's website and someone asked the question of, great management, and I have to kind of share what they did. So this person says they sold below bar 1. I'm assuming they basically sold the 2 closed, thinking trap bulls and more down. And normally I would say that's not a good thing to do. And if you do, you get out above bar 3. However, this person had the right. He did one thing that was right. He did something that made sense. He sold bar 3 and put his stop all the way up here. Now, that's basically risking, if I'm eyeballing this, 21.31 to, that's over 10 points. So that's about a 10, 11, 12 point stop. So sold down here, put a stop up here, and he figured, we'll probably go above bar 2, but we may not get above the high of the day. He was saying measure move target above, so, he was thinking, probably resistance somewhere up here. I don't know exactly what measure move, I guess. Maybe he's talking about measure move from the low of the day to the open projecting up. So, anyways, here's what he did. He sold the close of bar 2, strong bars up, and he decided to sell more below, I believe it's bar 8, this bear bar right here. And he actually ended up getting out of the entire trade with a profit on both. And that is exactly how you manage that trade if you're going to take that trade. You either, well, that kind of fits into the, that's certainly an okay thing to do. If a trader sold bar 2, if I sold the close of bar 2, I'm getting out up here. I'm getting out when this bar triggers. And if I do, I'm going to try and go long. I'd try and quickly reverse. The problem with, let me back up a little bit. The problem with selling bar 2 is a few things. Let me try real quick and find an example. It's sort of like this. We had bar 1, a reasonable short below bar 1, a less reasonable buy above bar 2. However, the bulls had plenty of chances to get out without a loss before we sold off. So it was a reasonable in a sense, and also we pulled back to a logical buy. So what I'm getting at is it's reasonable to buy above this high. So if a trader buys here and buys more lower, stop somewhere down here, they can get out of break even on their first with the profit on their second. And very often, a lot of times if a trader buys above and it's a bad buy, usually there's a chance to get out with a smaller loss before it just immediately stops you out. That's kind of what I'm looking for right at the second. We've had some, it's been a while since we've had these kind of setups straight on the open. This is sort of similar. Decent bar 1, but tight channel, so we may go sideways. You buy above bar 1, not a great bar 2, but it doesn't just immediately crash below bar 2. But it also wasn't a great signal bar. Here's a better, I think, example. You buy above bar 1, not a great buy, but strong enough. It's a strong enough bar for a second leg up. We got our second leg. It's still not exactly what I'm trying to find. Anyways. I don't think I'll find it. So the whole point, usually when the market does something fast like that, it's better to wait. In other words, we don't know when price goes up and just turns straight down. We don't know if the bears will trap the bulls and keep price from coming above this low. So, bulls buy, they buy this low, and then if we plummet down, you have trap traders. If we go above the low, scaling bulls will make money. They buy this low, they buy 1 point lower, and they get out here, possibly up here. So, but for always in real quick, I would not buy above bar 1. You got to think about the logic. So spike pullback channel or spike pullback channel, testing the bottom of the channel. Over here, yesterday's low. Yesterday is a low to sell setup. So also the bar's big. And look at the range of yesterday. It's forcing traders to buy really close to the top, and it's one of those, what's the math? If it's I don't think it's a 60%. It's not a high probability bet by any means. You're betting on the early low of the day, and usually when you're doing that, you want smaller risk. To give you an example, here's the first bar of this day, first bar of this day. But also this had a big gap up, so it's reasonable we test down. Here's the first bar of this day. Here again, same thing. So anyways, it's a big bar. Usually it's one of those things where a lot of times you get big bars that close on their highs, trying to entice you to buy above, and things of that nature. So anyways, for always in long, but I wouldn't buy above bar 1. It's, I would not sell the close of bar 2, and if I accidentally did, I would get out above bar 3 and go long. The one thing about with bar 2 is we don't know whether or not we'll find buyers at the low of this close and we test up. So it's a micro double bottom, down, and up. Second failed breakouts below yesterday's low. I know we didn't fall below here, but it's close enough to consider it a failed breakout attempt. And you have to think we may bounce. So decent buy up here. Still it's buying high. Okay, swing buy, bull breakout. So a decent 2-bar breakout. So we have a bull breakout. It's not really a bull breakout, but I call it a bull breakout. It's 2 consecutive bull bars. You have to think about a possible measured move to the upside. However, look at bar 3. There's your disappointment. So we went 1 tick above the moving average, 1 tick above the high of this bar, and we found sellers, so increases the chances of a trading range. We also got disappointment. We could not close in a new high. So here, more disappointment, then we got a breakout to the upside. And also, someone asked Al the question about, and I thought it was a really good answer on Al's part. They said, you say a climax is usually followed by 2 legs, but you also say the first reversal of that breakout or climax bar, it's the same thing. Let me just read it and then I'll rephrase it. You say a climax is usually followed by 2-legged correction, but you also say the first reversal probably will be limited after a strong move. These 2 principles seem to be odd. They seem to be odd with each other. Any comments would be helpful. Yeah, this person's asking, when you see a bull breakout, how do you differentiate a exhaustion gap, measuring gap? And Al's response is this. You were seeking the measuring gap versus exhaustion gap question. When there's a strong breakout at the start of the move, it will probably have a second leg. when there's a big bar late in the move, there will probably be a reversal with two legs in the reversal. Yeah, let me kind of talk about that. So here's a breakout, strong enough for a second leg up. Here's another strong bar. It's a breakout bar. This is the climax. This is the climax. Here, strong. It's at the start of the move, strong enough for a second leg. Here, possible exhaustion. If it is, we may get two legs down to this low or this low. Here, you have to think about a second leg trap. And a decent bear bar, so a lot of bulls get out. It's also a parabolic wedge. It's a wedge if you think about it. Computers see it as a wedge. 3 pushes, 1, 2, pull back, 3. It's the same thing over here. We have a breakout. It's a bull breakout of a bull flag. And a bad looking, there's no good reversal bar, so probably a second leg up. We have a second leg, so this is probably exhaustion. If this is exhaustion, you got to think about two legs down. Well, is this the second leg down? Is this leg 1 pullback, leg 2? We fell below the exhaustion bar. Now do we go up? Maybe. But again, no good buy signal bar. So maybe we'll fall down to here. And instead we got a bear breakout below a bear flag. Bear breakout of a bull flag. Excuse me. That happened on crude oil, actually. That's a really good example of it. Over here on the 60-minute chart. So bull breakout. So we're in a channel. We got a bull breakout. Strong enough breakout for a second leg. Right here. So bull breakout. Is this the second leg up? Well, it's really not all that clear. It might be. But again, no real great signal bar. And it's a micro channel. But here, clearly a bull breakout. And they're, a bull breakout, the same thing as a climax. So make it two legs down. And I talked about this last night. I assumed we'd fall down to here, maybe somewhere back in here. We ended up falling a lot further. This is one of those endless pullback examples. And they happen both ways. Sometimes you get this. We just pull back in a micro channel and then just collapse. And then often other times you just drift back. Bears give up, second leg down likely. Two-legged pullback, and then we just start selling off. But then at some point we get a gap. We got a couple of gaps in here. Is this the gap? Is this the measuring gap? Maybe, but we're still going further. And then, is this the measuring gap? Probably not. So it looks to me like right now the market's saying this is the measuring gap. We hit this, clearly bounced, hit again, clearly bounced. So, and we're at, the bottom of, we're back at this buy signal over here. But most importantly, we're in a trading range. And I think we'll have to go sideways for a while before we can bounce. And, you have to think, okay, so maybe this is just a large two-legged bull bear flag. Which, if that's the case, we may get some sort of leg 1 pullback, leg 2. I know it's not exactly accurate, but it's close. And, takes you around 50% back to here. So if bulls bought this low, maybe they buy more on a bull bar. We'll just have to see. So let me get back into today. For always in, I would not buy above bar 1. I would not buy bar 2. I would have sold bar 2 if we had a follow through of some sort. Bar 3, I think bulls get long above bar 3, certainly on the close of bar 4. I think they get out for the exact reason stated about the buy climax and possible parabolic wedge 2 legs down, or just an opening reversal. Doesn't matter what you call it, just as long as you recognize what's going on. So aggressive bears sell, bulls certainly get out. Other bears wait for the third close and stop up here. So sell, stop up here. No reason to get out. We're just collapsing. Then we found support somewhere over here at the low of, it looks like, the 18th, which was Tuesday. Fell below Tuesday's low. So that was the low of the actual bear signal bar. Fell below that low, started finding buyers. We got tails on the bottom. This is extremely climactic. So, as strong as it was, when we broke below, we could not get a close below this low over here. Big tail over here. So it might just be a trading range, and arguably the first reversal up will fail, which it did. But we have a low one short, sell climax, low one short, probably buyers below. Here we have a high 2 buy. I think a lot of the always in bears get out here, or here. Or if they're, if they're quick, they get out below here or below this bar. Betting that we'll set up a high 2. I think bulls will make money who bought the bar too low, so I think it's okay for bulls to buy above here. Stop somewhere down here. They can use a wide stop somewhere down here, or they can just put the stop below. If they get stopped out, look to buy again. What about over here? I think, definitely climactic, so you've got to think about 2 legs up. Probably not enough for a lot of always in bears to go short, or so they're still always in long. Most bulls will stay long. If a bear gets out below, I think they've got to go long again above here, or during this breakout. So we got the bull breakout, strong enough breakout for a second leg up over here. So I doubt many always in traders, strictly speaking, many always in traders would probably not get out, and they would hold. If they did get out, they've got to get long again above here. But you got to understand, realistically, we may just test up to this close, which is exactly what we did. So we tested up, big tail on bottom. Do a lot of bears get out here? Probably not, but I think it's okay if they do. I think a lot will certainly get out below here, and if not, definitely below here. You can call it a small double top lower high, head and shoulders top, left shoulder head, right shoulder forming a double top. And you've also got to be thinking trading range day. A lot of times in a trading range, price will test down and test key support. So trading range day, we have a lower range, bull breakout, upper range, 60% chance we test down to here. So I think it's logical to get out below. And maybe you sell this close. Would you sell here? I would not. It's similar to selling over here. We're at yesterday's low, which is a target. And here we're at the target of the top of the upper range. So if anything, I think bears take profits. Look what happened. Look what happened after these 2 bars went sideways. And what's different is here we weren't really at a target. Yes, we came back to this low, so theoretically, if a bull bought this low, bought more lower, they got out here. But I think there's also a lot of bulls who think we may get all the way back to this high close. And a lot of bulls want to see that test since we broke strongly. Look what happened. Open of the day, we broke strongly above the open and didn't stall. So I think we may test up to here. We had the chance, we couldn't do it. So at this point, the game's getting over, and you've got to think open of the day, we may retest it. That's possible. Trying to just see something real quick. Yeah, okay, so that's kind of what I want to see. let me okay, so here's what I'm saying. Arguably we had a measured move projection from this low to this open going up. We broke above it, and then we crashed strongly below here. So it's possible, I don't really think it matters all that much. It's possible we go from well, I did that wrong. Hang on. Yeah, I don't. Yeah. Anyways, here, strong enough breakout for a second leg up. Probably we will retest here. Here, we're close enough to the open of the day. Probably won't get far above it or below it. Maybe forming a triangle. So I think bulls get out above, and I'm sorry, bears get out above. Aggressive bulls buy. You know, I think they definitely get out below here, maybe here, but again, micro channel. First reversal up will probably fail. First reversal down will probably fail, and we'll probably have a second leg up. But again, you know, this is pretty weak, so we may just be forming some sort of a wedge, double top, and we test down. I'd get out below, and same thing over here. You know, if a bear went short, they'd probably get out. I'd stop trading always in over here. So really, you know, very kind of fascinating day. Reminds me a lot of a day we had in the past. I think it's this day, you know, broke to the downside, went sideways, broke more to the downside, and then strong enough breakout, maybe a second leg down. We may get that second leg, but over here, bears had several chances. You know, bull breakout might be always in long. 60% chance we get back over here. Bears gave up. Strong enough breakout for a second leg, but then tried to get an exhaustion gap here. Two-legged reversal. Alright, that's all the time I really have. Not really a lot to say. You know, daily chart. Again, another doji in a tight trading range. Bulls had the chance to get a bull breakout of a low too short and maybe some sort of measure move up, but probably not gonna get that. Probably just gonna stay sideways. You know, we really seem to be liking the August 2nd low, the bottom of this trading range. Weekly chart, you know, a second entry buy at the moving average. Big tail in last week, so you know, it's a good buy, better than this buy, but at the same time, will we close on the high? Will we close on the high tomorrow? I doubt it. And you know, at the end of the day, it's hard for traders to escape the fact that we're forming a triangle at the middle of the range. So, you know, in general, triangle, you can call it a final flag. 50-50 chance we break to the upside. You know, I still think we're going to close this gap, but who knows? We'll have to see. Monthly chart. I don't have a strong opinion. I think we're going to close the gap, and I think we're reasonable chance we get to this low. All right, that's all the time I have. Hope everyone has a good evening.